You know how some days just feel normal, but then you look back and you realize everything changed? Well, February 11th, 2026 was one of those days. Today, we're going to connect the dots and show you how one single 24-hour period gave us a crystal clear look into our AI-driven future.
Okay, just look at this number. $120 billion. That's not a company's total worth. That's how much value got erased from the world's biggest financial firms. And this wasn't some slow-motion crash. This happened in a matter of hours. The reason? A single AI app.
So that leads to the obvious question, right? How on earth is it possible for one piece of software to send a shockwave that big through the financial world? To get that answer, we've got to break down what happened pretty much minute by minute on that one specific day. So let's set the scene. The date, February 11th, 2026. For almost everyone, it was just another Tuesday. But under the surface, in the world of finance and software development, even inside your web browser, AI was lining up a series of dominoes and getting ready to tip the first one over. And that brings us to the first major event of the day, the AI shockwave. We're talking about pure, unfiltered disruption, all delivered in one single, incredibly powerful launch.
A little startup nobody saw coming, called TaxGenius, released its new AI tool. On the surface, it just helps with tax planning. But the real magic was in how it did it. It could analyze real-time market data to cook up super complex strategies, like the perfect moment to sell certain assets. Not in weeks, but in minutes.
And just look at the difference here. The old way, you hire a human advisor, it takes weeks, costs a fortune, and they can only do so much. The new way with TaxGenius, it takes minutes, costs a tiny fraction of the price, and you can scale it to millions of people instantly. This isn't just a small improvement. It's a total game changer for an entire industry.
And boom, here's the immediate result. The market totally freaked out. The biggest wealth management firms saw their stock prices just plummet by 35% in 4 hours. That's where our $120 billion number comes from. The market instantly realized that any business built on selling expensive human time was now seriously vulnerable. But the shockwave wasn't just hitting Wall Street. On that very same day, AI was weaving itself into, well, pretty much everything. From the code that builds our apps and websites, to the phones we all carry around in our pockets.
Okay, let's switch over to software development. On February 11th, GitHub announced it was fully integrating new AIs like Claude 4.6. All of a sudden, AI could write its own complex code, hunt down bugs, and even generate documentation. This boosted developer speed by something like 70%, which is amazing for productivity, but it immediately sparked a huge debate. What happens to junior programmers? The people whose job is to do exactly those tasks.
But here's the key insight. The conversation wasn't really about replacement, it was about collaboration. The role of a coder is changing. It's becoming less about hammering out every single line of code and more about being a system architect, someone who guides the AI to build amazing things. The future, it seems, belongs to people who can work with the machine. And the story keeps going, this time in the world of consumer tech. On the exact same day, an internal email from Samsung got leaked, giving us the first look at the new Galaxy S26. And the star of the show wasn't a better camera or a brighter screen, it was the AI built right into it. And the main idea here was this thing called on-device AI. What it means is that all the heavy-duty AI processing, like real-time language translation or crazy photo edits, it all happens right there on your phone. Nothing gets sent to the cloud. In a world that's getting more and more worried about data leaks, privacy just became the new killer feature. This is the new tech battleground. But for every action, there's a reaction. As AI got more powerful and, frankly, everywhere, February 11th also marked the start of a really interesting human pushback. It was a movement that was all about one simple idea: choice. Mozilla, the people who make the Firefox browser, announced something that seemed totally backwards. They called it an AI kill switch, and it's exactly what it sounds like. It's a button that lets you completely turn off all the AI-generated summaries in your search results, so you only see the classic blue links. Now, this wasn't just another feature. It was a huge statement. Mozilla said flat out that they were doing it because users were worried about how accurate and reliable AI answers are. I mean, we've all seen AI get things hilariously wrong.
This feature gives the control back to you, letting you decide what to trust.
And this craving for human touch wasn't just about our web browsers. That same week, story-driven video games like Blade Runner were selling like crazy. It just proved that even as AI gets better at creating stuff, people still have a huge appetite for deep, personal, human-made experiences.
So let's recap. We've got massive disruption, we've got deep integration into everything, and we've got a human pushback happening all at once. This all builds up to the biggest story of the day, the birth of a new economy, driven by what people are calling the Great Wealth Transfer. So here's the most important takeaway. That $120 billion that got wiped from those old-school financial firms, it didn't just vanish into thin air. It had to go somewhere. The money was literally flowing out of traditional industries built on human experts and pouring directly into AI-first companies. And you can see that dynamic perfectly right here. As the value of traditional companies went down, the value of AI companies like Anthropic, OpenAI, and NVIDIA shot up. We are literally watching a historic transfer of wealth from the old economy to the new AI-powered one, and we saw it happen in a single day.
So, if we boil this entire wild day down, what did we really learn? First, a new economy is being born, and it's defined by this huge wealth transfer into AI. Second, a new type of professional is taking over, where your value isn't just what you can do, but how well you can collaborate with AI. And third, a powerful new consumer demand is rising, a demand for choice and for preserving that human touch.
Ultimately, that one day back in 2026 showed us that the whole conversation about AI is shifting. We're moving past just being amazed by what it can do. The real question, the one we all have to answer now, is what role are we going to choose for it in our lives, in our economy, and in our society? What will we allow it to do?